Picture insights on the news that's shaping markets. For that, we want to welcome in Jeffrey Small, president of Arbor Financial. Jeffrey, sorry, I'm Mondaying. I'm sorry about that. But let's talk about this geopolitical backdrop for markets. You're seeing markets shake that off today. The surprise strikes by the U.S. this weekend on 3 nuclear sites in Iran. I thought futures coming into this week would be under heavy pressure. Why didn't that happen?
Well, I think that the markets have a sense of calmness about them, that this could be one and done unless Iran retaliates. And of course, nobody wants to see retaliation. They want to see a complicit Iran within a non-nuclear state, which every president has said for the last 25 years that they weren't going to allow this to happen. And so, it's a good thing that it happened. It needed to happen, and it's going to calm the global markets. It'll calm the Middle East, but hopefully it'll bring Iran to the table. But maybe regime change, who knows? But the markets are looking more forward than they are backwards, as per this weekend's activity and taking out their nuke sites. And so that's a good thing for the markets to bring that era of calm back into the markets.
Okay, so more forward than backwards. Obviously, that makes sense. Markets are obviously trying to price the future outcomes here. So let's talk a little bit about the S&P 500. It looks like we're making a push for that 6,000 level once again. Is that just a psychological level?
The 22 times earnings is the psychological level, and that's kind of where the markets are hitting this threshold now. Now we've had this really quick recovery since the beginning of April lows. But, Diane, when we have a bearish sentiment of 60% or higher, the market has averaged a 27% snapback post-April 8th, which would give us about another 13% melt up from here. I think that melt up has the ability to definitely happen between now and the end of the year, especially with what happened this past weekend. So I think that bolsters the potential of the market to keep growing, even though presently we're hitting a little bit of, upside fatigue since the bounce.
So what's your base case then for the second half of this year, Jeffrey?
Well, the best case is the tariffs are resolved, of course. That has to happen. The geopolitical tensions are going to subside. That has to happen. And energy prices will continue to drop. And if we can get those three, if the Trump administration can master those 3 things, then it looks pretty positive for the rest of the market. But these are shifting sands, Diane. We have to be modernists. We have to be pragmatists here. These are things that could upset the imbalance of the market. If tariffs come back, it won't be a pretty thing for the markets going forward.
So you emphasize that now is the time to be smart about stock picking, preserving both value and growth. So how are you identifying what traits are you looking for in terms of smart plays to weather any kind of uncertainty?
Well, I think we used to weather uncertainty through bonds, but bonds really aren't a hedge against stocks any longer. I think what we like to do, Diane, is we like to buy companies that are outperforming quarter over quarter on their bottom line. And that's what investors really should be looking at today. Because if the economy becomes undynamic, we hit some unresiliency here. The Fed doesn't cooperate and lower rates, because that's another issue. The Fed would like to see lower rates. That'll also help the economy and the markets as well. If those things don't happen, then we're going to have some headwinds at these high valuations. And so can the market hit 23, 24 times earnings? It can, but it's going to need some assists in those areas that we've mentioned here, including the geopolitical, the trade, and by way of the Fed. And without those things falling into line, let's say, we might just hover here for a little bit.
Okay, so we might just hover here for a little bit. So far this year, tech hasn't been the outperformer, but we've seen quite the recovery, right? I know there are some specific names you like within the Mag 7, like Amazon, like Tesla, like NVIDIA, like Meta. Not all of them are created equal. Let's talk a little bit about Tesla. It's having a huge move to the upside today, rallying 10%, but it has underperformed the Mag 7 year to date. Why do you like it now?
I loved it when everybody was saying, don't buy the Mag 7. And yes, maybe it's the 3rd or 4th best performing sector this year. It's underperforming the market, and that's fine. But that's when you buy, Diane. When everybody else is saying, don't buy it, that's when you buy. That's the news that every investor should want to hear. So now's a great time to start accumulating, because companies like Amazon and Meta have outperformed quarter over quarter, exceeded baseline guidance and expectations, for the last 2.5 years. And so with the robotaxi coming on deck here and it being launched officially, there are a lot of high flyers in the investment world. They're out there in Austin today taking rides this weekend, and I hear nothing but good reports in the back channels here. And so, those are companies that you want to own. Tesla could explode to $500 overnight from where it is right now. It's up 10% as of this morning. And so bad news, of course, the opposite will happen. Tesla could have a sell-off.
Yeah, this is true. I mean, look, that $500 price target is the one that, we often hear about with regard to Wedbush being the most bullish over there with Dan Ives. I'm curious to know about Amazon. Are you worried at all about any lingering tariff risk?
That's just like NVIDIA and Amazon. They both have tariff risk. NVIDIA has more tariff risk than Amazon. But Amazon has streamlined their operations. They've reduced cost, increased profitability. They have lots of cash flow. They've never really announced a buyback recently. If they hit hard times, they're going to do some things to jerry-rig their financials, make their balance sheet look good, improve net earnings. And so, we really can't live without Amazon as one of the largest retailers on the planet here. They're here to stay. And the largest cloud company on the planet as well. And so AWS is going to keep expanding. That is the fastest dynamic, 15% growth year over year. That's going to continue, Diane.
All right, Jeffrey, great perspective. I really enjoyed our conversation today. That's Jeffrey Small, president of Arbor Financial. Thank you so much for your insight and kicking off the week with us.